Hello. This YouTube series is for people who want to develop fundamental skills critical to payroll operations and compliance. The most simplistic payroll consists of three groupings of costs. First group is the traditional arrangement between the employer and employee, the agreed to wage. The second group of cost is the various taxes, and the third is benefits paid by the employer. These three groups are combined to form the gross payroll cost. Wages. Wages are the direct remuneration of services. There are many different forms of compensation and include salaries, hourly pay, commissions, and bonuses. Taxes. Governmental social welfare programs are funded via taxes on both the employee and the employer. The employee's share is a deduction from his wages. The employer share is a direct obligation and is wholly tied to the wage. Therefore, these taxes are an additional cost of wages and consist of the following. Social Security. The Social Security rate is 6.2% of the gross wages, and the employer matches the 6.2% that is also paid by the employee. Medicare Tax. Medicare tax rate is 1.45% of the gross wage, and it is also matched by the employer. Federal Unemployment Tax, FUTA tax. The rate is 0.6% of the first 7,000 of the gross wages, and this tax is paid only by the employer. Employee does not pay this tax. State Unemployment Tax, SUTA. SUTA varies from state to state and usually consists of flat amount plus some percentage of gross wages. Health insurance. Health insurance is typically a flat rate cost per employee per month, and sometimes the employee pays a portion, and this is a deduction from his or her wages. Retirement. Most employers pay some type of matching amount up to 5% of the wages of the employee. Vacation, sick time pay. This is a paid time off taken by the employee when he is sick or when he's on vacation. Dental, vision, cancer. Similar to the health insurance, the employer may pay a portion or provide a benefit as deduction from the employee's wages. Life insurance. Life insurance is the most common type of plan, and it has a flat rate benefit in case of death, typically a 50,000 face value policy payable to the employee's beneficiaries. Section 125 plan. This is a unique type of plan encompassing many different pre-tax benefits to assist the employee in a better quality of life. Worker status. The employer must make two distinctions when classifying workers. A worker can be an employee or an independent contractor. Employees can be exempt or non-exempt. Both of these distinctions are discussed further. Employees versus independent contractors. Employers must withhold federal income tax, Social Security tax, Medicare tax, state income tax, and local income tax from employees' paychecks. In addition, the company must match the Social Security tax, Medicare tax payments of employees, and make federal and state unemployment insurance contributions on their behalf. However, withholding is not required for independent contractors who provide the company with their tax identification number TIN. Additionally, the company does not pay Social Security tax or Medicare tax or federal and state unemployment insurance contributions on the payment for services provided by the independent contractor. Designating a worker's status as employee or independent contractor is the responsibility of the employer, not the employee. The primary way that an individual qualifies as an employee or independent contractor is the common law test. Based on the common law test, following are some of the key features that distinguish an employee from the independent contractor. The employee have assigned hours or a set schedule. Employee gets trained by the company in a certain method. Employee complete any or all work assigned by the manager or by the supervisor. Employees are provided the tools and materials necessary to finish their work. And employee have only one employer. On the other hand, the independent contractor set their own schedule, use their own personal method for finishing the assignments, they use their own tools, accept the task on case-by-case basis, and can turn down the offers of work. Independent contractors may have more than one client. Employment eligibility. The burden of verifying that any employee, regardless of the nationality, is eligible to work in the United States fall on employers. Employer must check the employment eligibility of all new employees. On the date of hire, the new hire must fill out Section 1 of the Form I-9, Employment Eligibility Verification. Within 3 days of hiring the employer must review the employee's documents and complete Section 2 of the Form I-9. This form must be retained for the longer of 3 years from hire and 1 year from termination. The Form I-9 requires that new hire documents two facts: their identity and their right to work in the United States. Form I-9 lists the documents that can be used to verify employees' eligibility. An authorized employee of the organization or your agent must examine the new hire's documents to see if they appear genuine. Social Security numbers. IRS regulations require that employees provide employers with their Social Security card when requested. The Social Security Administration encourages the employers to verify an employee's name and Social Security number on the employee's W-4 form as a part of hiring process for tax withholding and reporting purposes, and workers not to carry their Social Security number on them because of the possibility of identity theft. Social Security Administration processes over 300 million W-2 forms a year, with 10% of these W-2 forms having names and Social Security numbers that do not match. Social Security Administration places an unposted wage amounts on these W-2 forms into the earnings suspense file. If a taxpayer finds a discrepancy in their earnings, submits a discrepancy to the Social Security Administration, and it finds the record, the SSA will take the earnings out of the earnings suspense file and apply them to the taxpayer's individual record. IRS advises the employers for the Social Security compliance. The IRS has made the following suggestions to suggest employers in maintaining compliance with the requirement to have correct Social Security numbers. Number 1, ask each new worker for proof of his or her Social Security number by showing you a Social Security card. The employer should maintain a copy of the W-4 form the employee provides, and the employer should also document any subsequent solicitations for a new W-4 from you and make in the event that you receive notification from the SSA or IRS that there is a problem with the employee's name and Social Security number. Maintain accurate records of the Social Security number and the name provided by the employee in all payroll records. Remind the workers to report any name changes due to marriage, divorce, etc. first to SSA and then to the employer. Validate the Social Security number on the W-4 form using the SSA's SSN verification service. Remind employees to verify the accuracy of their name and Social Security number when they receive their W-2 form, checking to be sure that there isn't a typo or another error. Note that an individual taxpayer identification number can never be used to report earned income. When an employer receives a W-4 form with a Social Security number that begins with 9, the employer should recognize that this is not a Social Security number, but an ITIN, Individual Taxpayer Identification Number, that cannot be used when filing the W-2 forms. However, if this is the only number you have from the employee, SSA advises employers to use it.